I'm here.
Hello.
Yeah, can you hear me?
Yes, I can hear you. Check your Telegram, please. Okay, please. Okay.
Okay, sure.
So we're gonna jump into the euro versus the US dollar. This is a recording for the war room. Can you hear my voice, Mahesh?
Yeah, it's clear and good.
Clear and good, perfect. So what we're gonna do is, this is a war room recording the FX division of the group. And Mahesh, our data science all the way from India, is with us. And we're gonna talk a little bit of the euro versus US dollar on the daily chart. We wanna capture powerful long-term directional moves. There are a lot of scalpers, a lot of individuals that want to trade in the short term, intraday swing trade. But the bottom line, that statistics indicates that the long-term success rate is when you place long positions. Long positions, I mean, you stay longer in trades. That's where you really build wealth. If intraday will be the case, everyone will be rich. Everyone will be wealthy. It's not how it works. So we're looking at this daily chart. We're looking to capture something that is meaningful for traders, for those that are not traders. And those that are not traders, they cannot really get in the mindset of buy and selling, sell, buy and sell every day. It's challenging. It's mentally tiresome, right, Mahesh?
Yeah, that's right. Yeah.
It gets you very tired. So what we're looking is, we're gonna look into our strategy, okay? And our strategy right now, believe it or not, it's long the euro dollar. The tactics are different methodologies that we're gonna use to join the trend, join the opportunity that we're looking at. And right now we're looking at trend Fibonacci. That's one, to have a mathematical view of how to enter. And then we're gonna look at offer, demand, and have an idea where it's going to land, or where the price is going to target. We're gonna answer that question. Of course, obviously we can use trend Fibonacci to give us a view under some rules, but we just want to also give us further evidence how far we can take this. Okay, so now we're going to look into this, and then Mahesh will work a little bit with volume and different levels that I think is relevant for all of us to know. So we have this trend Fibonacci all the way from the bottom, the latest bottom from the euro dollar, 106.36, and now we're looking at the cap. This is the cap so far at 111. This one is 111.46. So we have a pullback. Price that it is right now is trending below the 50 exponential moving average. It's fine. We lack confluence. It's less evidence of a strong move upward, but still we have this interesting, very powerful rebound at the 38.2% Fibonacci, 109.51. So what we can think is that this will be the beginning of a reversal in the US dollar. The week started with the US dollar taking advantage. If we just show the rates, dollar Canadian, of course, oil not doing very well, so almost 260 pips to the upside. And we have the pound dollar sustaining, again, backing up from 122.41, sort of a flash crash yesterday afternoon, European time. And now the euro not doing well, revisiting 109.26, now pushing forward from that level. The dollar against the yen all the way pushing from actually a low of 107.17 yesterday, now trading 100 pips, went all the way up to 108.72. And also we may talk later about a probable reversal called the ROW, rest of the world versus China, where China is already on track to recover fast, and this will benefit, of course, the Australian dollar. That's what we can look at. So this will tell us that, at least in the short term, we shouldn't be surprised, and we wouldn't be surprised if we see back the dollar trading at 111.45 to close this level. And we can say also in the daily chart, we have this offer. We have it here, this level. And the price will need to close this offer, 111.36. We have the offer, and then bring my pencil. This is the offer, and then we will have the retest of the offer. and then we can have a pullback again. Wouldn't be a surprise. Nothing will be a surprise to us to see a retest of 110.26, and then finally go to these levels. Also, the other news is that Automercados back in Madrid, they reported, and it has been now all over the wires, that the Federal Reserve is just again lowering interest rates for banks to get loans. So that should also put some pressure on the US dollar and flood the market with US dollars, increasing the liquidity. And the more liquidity we have, the weaker the US dollar. And that's convenient right now for Trump, if we have a weaker dollar, to sustain the recovering equities, and also for the Federal Reserve. So two big players that need desperately, they need the US dollar to just go down a little bit more. Mahesh, the floor is all yours. Go ahead, man.
Okay, can I share my screen?
Yes, go ahead.
Okay. Okay, Jose, do you see my screen?
Yes, I see your screen. I'm looking at the monthly euro versus US dollar.
Yeah, so what I think is happening here is it's just a zone tap. You see this powerful zone that it has been bouncing off all the previous times. So even at this moment right here, at this price, we see that the price tried to go down below that, but it was rejected, or it found support in a pretty strong way. Also, we see the volume here is pretty high. It was so we will just skip to the weekly chart right now. So we
Yes.
see that, yeah, we see that the price tried to come to this level, but immediately it found buyers, and the volume also is pretty nice. This blue bar indicates the buying volume. We see that there was a very strong selling volume, but the very next candle was a buying volume, and it actually closed above this zone that I've marked over here. With pretty good volume, it closed above the zone. And now this particular candle today, I think this would be a decisive candle that is clearly going to show us a direction. So if we see holding this support with a good volume, it's a pretty good chance that, as Jose was talking about, we can go to these levels, all these levels that you were pointing out, Jose, this particular level. And I'm not sure about this, when it is possible, but I think at least this particular levels we can see in the coming future.
Absolutely, yeah. Absolutely. Do you have the currency ad rate available, Mahesh?
Yes, I do.
Can you show us a little bit of that? And also, I think if you have the Fatman and you throw a little bit of Hawkeye Trader from Randall Lindsay, it would be beautiful to have it for everyone to pay attention to it.
Okay. So first we will just check the Fatman. So this particular window is the Fatman. The Fatman is a part of the Hawkeye suit. It gives us the indication of the currency strength. It actually tracks down the individual currencies and shows us the strength and weakness of the individual currencies. So this the sky blue color is the USD, the US dollar, and the green color, this one, is the euro. So we are actually seeing that euro on the monthly is actually coming off, or is curving toward the upside. So it is kind of gaining strength. And we see that the USD has been coming down and it is stalling right now. So just based on this, we can actually assume or predict that we will be seeing a strength in the euro, and maybe the USD will weaken, or at least it's going to stall. And this particular software is called the currency array. We can see the pair strength, pair trend. So this upward direction where we see the green color is actually showing the bullish directions of these particular pairs. And the strong red color will show the downward trend. And everything in the middle is just consolidation or preparing for the next move. So in this, we see that, let's just filter by euro. If we are going to filter by euro, we will actually see that some currencies are actually now starting to trend up. And compare it to the USD, if we see, Euro USD has not been trending up. And on the Fatman, we are actually seeing it is now beginning to curve up, or coming from the oversold conditions. So it is possible that right now would be a good time to start building the long positions so that we can actually benefit from the move when it does go up.
Absolutely.
This was from the currency array and the Fatman. Now let's just check the Hawkeye. So this is the Hawkeye monthly. Oh no, I think it is the weekly. Let's check the monthly.
Yeah, okay, go
So on
ahead.
the monthly, we actually see the candles being green on different time frames. And this is the level, this is the strong support level being pointed out by the Hawkeye. And we see that this level is not broken, the 1.09 level. This level has not been broken yet. It did spike down, but it is still holding that level. And this
Okay.
would be the weekly view. Jose, would you like to describe the weekly on the Hawkeye?
Well, we're looking at the, we already, Mahesh talked about the powerful Fatman, the currency strength. We love to use the Fatman because it gives us an early indication of how things are looking. And as he pointed, we already know, thanks to the Fatman, it's one of the tools part of Hawkeye Traders. We recognize that the euro dollars are reversing, and still is a little bit clueless in the middle of where exactly the dollar may move. But the evidence is that we, based on the fundamental, know that the dollar needs to get a little bit weaker, not really to crash, but just give an opportunity for other markets. Remember, a strong dollar asphyxiate emerging markets. This is a fundamental known fact, and we need to be aware. Now, at 109.70, we know there is a reversal. We know that this can be a trap. Look at this. This is in pink. This is a bearish in this moment, and that it can reverse immediately, trapping those that are shorting the euro. That's a short seller squeeze. And what it does is basically lure traders into think, okay, this is the end of the euro. They're gonna short, and then they bring all that liquidity, all those euros, pound, whatever is the case in your currency, whatever is how your account is, your trading account is denominated, you're just pouring that money into the markets. The market brings that liquidity and then prepares to attack and reverse. So what we look now with, let me just, my tools, if I can have my tools. Well, I don't have the pencil, but what I will do is just guide you with my with the cursor, is understanding how it aligns. Now we still have, when you look at Rokill, another powerful tool, we still have a little bit of red. It's a little bit of red because in a way we may be just jumping before the beginning of the trend. So we're taking a little bit of risk, extra risk on this matter. Now this can at all time can switch. This is a monthly view, so you can see here this area we have the green. But the other thing to mention is that in the last couple of months, we have a huge volume. This is the volume, Hawkeye volume pack. And we can see the trend right there. I'm going to just take...
Jose, just a correction. It's a weekly view we are having right now.
Weekly, have the weekly view. Yes, we have a weekly view. Absolutely.
Okay.
But having said that, thanks, Mahesh. We have all these weeks, 1, 2, 3, 4, 5 powerful weeks of excessive amount of volume. We can see at the volume, look at that. Almost 500,000, just looking at the units. And right now we're in the middle of the range. Now, Hawkeye is providing all that information, volume, price, Fatman. All those are indications that we may think that we are in the beginning of a switch, a reversal of the trend, at least in the medium term for the euro dollar. And at the same time, if we add a little bit of historical levels, if we go all the way back to 2019, we know that this level, we can see it's in front of our faces. The 109.79 or 109.70 has been a critical level for this currency pair. Look at this, Mahesh, right here. Yeah, strong support, 109.31. Last week, we have a dip. The euro dollar dipped all the way to 109.45, reversed all the way to 111.46. Now, again, it's retesting. That should not come as a surprise to any one of us. And from this level, if all the stars align, we're in the beginning, as I said, the beginning of the reversal. There's evidence. Strategy so far, euro dollar long. I will say I will have my stop at 109.15, 10 pips below today's low, actually. And that's what I want to do. Go ahead, Mahesh.
I think that's about it. Just to add a little point, a small point, we see these two green dots, right? So this indicates the trend direction. So the Hawkeye on the weekly is actually telling us that the bullish trend has been set in momentum now. So it's going to develop something like this. If it's going to go up, So we will see this trend continuation. It will give us the trend and the stop. So I think that's a positive indication for us.
Absolutely. So thank you, guys. We're going to upload this recording on Market Traders Daily YouTube channel. In the description of the video, you will have access to, for all of you, you can join one of our team members, Ross Mullins. Ross Givens is in equities. Ross Mullins, the Prodigy trading group, fully FX trades, different application. And also you can take a look at the different Hawkeye Traders tools. We'll do our best to, on daily basis, come at you with what we're looking at the markets and how to apply the tools. It's not only to see how they look, it's apply them on real time. Thank you, everyone. Mahesh?
Yes, thank you, everyone. Have a good day.
Ciao, ciao, guys.